Hey everybody, it's Jack and welcome back to another video. I hope you're all having an amazing weekend, and since it is the weekend, it is time for another portfolio update video. We just finished week number 15 of my WealthSimple challenge, where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing for one day being able to retire off of my investments. As always, in this video, I'll be going over the stock market in the week that was. It was a pretty crazy week, so lots to cover there. I'll also be going over all of my stock positions, my account status. I'll be going over the stocks that I purchased last week, some that I sold or some that I trimmed. And then at the end, we'll go into my weekly watch list for the week ahead and really going over the stocks that I'm looking to add and I think are good investments at the current prices and getting into the explanation of why that is. So a lot of covered in this video. I hope you guys enjoy, and let's jump right in. So touching on the stock market last week, it was again a crazy week. We saw tons more volatility, swings up and swings down. It came out early in the week that US inflation rates are on the rise, up to 4% over the past 12 months, which was a big shocker to most, which is not a huge surprise as we have been funneling tons of money into both the Canadian and US economy. But yet again, that was a little bit more rapid than people were thinking. So we saw quite a bit of a sell-off early in the week once that news came out. And then at the later of the week, we saw a rally in the stock market and we really started to see things start to pick back up in the upwards direction. So again, crazy volatility, which leads to lots of opportunities out there in the stock market to maybe pick up some of your favorite stocks when they take those dips. So let me know down below what's your go-to stock last week to buy on the dips. Let us all know what you've been picking up. Later in the video, I'll really dive into how this inflation is going to be playing a role in my investing strategy and what kind of stocks am I maybe going to start to stay away from and what am I going to start to put most of my money towards going forward with these different circumstances in the market and the current environment that we're seeing. So jumping right into my account status and where my portfolio is currently sitting, I'm currently sitting just under the $5,000 mark, sitting at $4,992.05. We actually saw quite a big recovery day on Friday. My account was up $91, 1.86%. But for the actual week, my account was actually still down as I am pretty heavily, decent chunk of my portfolio is in those kind of higher risk growth stocks that I'm really passionate about long term, but those took an actual pummeling last week and did not perform well. So it's actually down around 1.5% last week overall. And if we actually go to all time, I'm now down because of this, around $51.95, around 1%. So definitely not the best of weeks, but I'm not really worried about it long term. I know that the growth stocks that are taking a pummeling right now are actually going to recover and do really well in the long run. Again, all of my investments are ones that I'm looking at a horizon of at least 5 to 10 years for holding and ones that I really see growth over those timeframes. So I'm really not worried. And again, and this is really what I'm trying to get across to everyone, that as long as you've done your research and due diligence on your stocks and you know why you're investing into these companies, then you really shouldn't be worried about the short-term movements in your stocks and really be keeping that big picture mindset and remembering that you're investing into these companies for years of growth, hopefully. So let's now jump into my Google Sheet spreadsheet where I track all of my portfolio breakdown as well as my passive income from my dividends. And I'll go over all the stocks that I added to last week, as well as some that I actually sold. So let's jump right in. Alrighty, so now we're in my Google Sheet spreadsheet and let's kick it off with going over all of my stock positions and talk about the ones where I either bought or sold last week. So let's start it off with the brand new stock position in my portfolio, which I talked about in last week's video. It is Canadian National Railway, ticker symbol CNR. This is a brand new position that I picked up one share of last week, around $135. And since then, it has dropped 4% to around $1.30. And that's where it's currently sitting at. And this is actually a good thing because I'm going to be continuing to add to this position. So I'm actually going to be able to get in at lower prices. And the reason for this drop was late last week. It actually came out. It looks like CNR, or Canadian National Railway, has been approved to acquire Kansas City Southern, which it's been in a bidding war against CP Rail. So this is actually some really good news, I think, for Canadian National Railway. But it has caused the stock to actually sell off a little bit. And this is because it's viewed that Canadian National Railway overpaid for Kansas City Southern. So this is going to cause the stock to drop in the short term. But in the long term, I think this acquisition of Kansas City Southern is really going to help expand Canadian National Railway's reach when it comes to its actual tracks and railroads. It's now going to have the opportunity to have tracks from Canada all the way down to Mexico. So it's going to start to cover all of North America, which I think in the long term is really going to help this stock continue to grow. And this is one that is a dividend king here in Canada. It's been growing its dividend for like 20 years straight at an average rate of 10 to 15% every single year. So just by holding this stock, you're really going to see that dividend grow and hopefully see that share price grow as well. So again, this is one that I've just started a position in. It's only 2.7% of my portfolio, but I will be continuing to add to this. So now that we've covered our brand new position, let's actually cover one stock that I actually trimmed my position in last week. And this is Standard Lithium, ticker symbol SLL. I actually sold off about a fifth of my position, so around 20% of my position in Standard Lithium. I had 130 shares. I now have 105 shares. And the reason I did this is because, again, in my last video that I just did, where I talked about the current state of the stock market, inflation, and all of that, I talked about how the rise in inflation can cause a rise in interest rates. So companies who leverage a lot of debt will have a harder time paying off their debts and really utilizing the debt to grow the company. And Standard Lithium is the one stock in my portfolio that is pre-cash flow. This is a lithium mining company that is still in the mining and development phase. So they haven't actually began to sell their lithium and make a revenue. So this is one reason that I actually trimmed this position a little bit. It's not that I don't think this company is poised to be growing and doing great things. I think it is, but I just wanted to de-risk and lower my position because Standard Lithium was my largest position in my account. Another growth stock that I added to last week, just 5 or 10 shares, was Greenlane Renewables. This is one that has been selling off like crazy, both because it's a renewable stock and the renewable sector has not been doing well, but also growth stocks also have not been doing well. So kind of a double-edged sword here, especially since most of my growth stocks are kind of in the renewable sector. But Greenlane Renewables actually had its earnings report come out last week, and it was super promising and super good earnings report. It actually came out that they're doing record revenues and still have a huge backlog of revenue and jobs to actually do in the future. I think it's over 700 million or something crazy like that. I think Greenlane Renewables is really a $3 stock in the next year or so, and I am dollar cost averaging lower into that position as I am down significantly in it. And I continue to add to other renewable positions as they sold off last week. The other one I added to was Brookfield Renewables, BEPC. This is one that has been really selling off over the past 2 weeks. It's dropped around 25% in value. So I picked up one share around $45. It has since rebounded a bit up to $47.50. So definitely happy about that one. But again, I think this is another stock for holding for a decade that is going to continue to grow. It has an over 3% dividend at the current prices, and it makes up 6.8% of my portfolio. And I also bought 2 more shares of Algonquin Power and Utilities. This is a utilities company that also has 33% of its business in renewables. So kind of a utilities and renewables play, and is one of my largest positions at 9.1%. And it sold off from around $20 to around $18.50 over the past few weeks. But they just raised their dividend around 10% from 78 cents per share to around 84 cents per share. So the current dividend yield for Algonquin Power is sitting at over 4.5%, which I think is awesome for this stock. I think this is also a growth play and a great dividend stock. So this is one that I will also continue to pick up at these prices. So now taking a look at my passive income and my dividend tracking, we can see that by adding a few dividend stocks last week, I brought my actual annual dividend income from $117 up to over $125. So I added about $8 of annual income from these dividend stocks, and my monthly average jumped around 70 cents. So I added 70 cents to my monthly income for the rest of my life. So this is kind of my mentality, just chipping away at a couple dividend stocks a week to just really help increase that passive income for the rest of my life. And I added a new little row as I continue to update this spreadsheet and start to add new features. I added this new little row for total portfolio yield. So my total portfolio dividend yield is currently sitting at 2.5%. This will just be something that's interesting to monitor as I progress and start to add more dividend stocks, maybe more growth stocks, and see how this fluctuates. You know, ideally, if I was retiring, you'd want this much higher. But as I'm focusing on growth and passive income, really 2.5% is not bad. Might want to get that up to 3%, but we'll see how it progresses over time. If we now jump into my portfolio breakdown chart, we can see the updated weightings of all of my positions. You can see that HEO, H2O Innovations, is currently my largest position. This is another one that I might trim slightly over the next few weeks to a few months, as I've come to decide that I have 5 kind of high growth penny stocks in my portfolio, and I've kind of come to the idea that I want them all to be around 5% in weighting of my portfolio, so that together they make up that 25% of the account. So kind of wanting to bring down Standard Lithium and H2O Innovations and help bring up the others in Greenlane Renewables, Good Natured Products, and MCI One Health. So this is just something that I'll continue to monitor over the next coming weeks. And if HEO goes on a run, maybe I'll trim it a bit, but at the current prices, I'm definitely just going to hold this one out. So if we now go to sector allocation, we can still see that renewables is by far my largest sector, as I'm super bullish on the renewable space as a whole over the next decade or so and beyond. And then I have utilities sitting at around 15% of my portfolio, Again, I mentioned in my previous video that I think utilities are a great hedge against inflation. So definitely happy to have this as one of my major sectors in my portfolio moving forward. And then I'm also going to continue to add to my financial sector. As you can see, it's only at 6.3%. I've got my newer position in Manulife that I'm going to continue to add to, as well as starting to get more exposure to Canadian banks and building up my position in TD. And you can also see that rail transport that now has a 2.7% weighting because of my new position in Canadian National Railway. So for asset allocation, we can see that my growth position by the trimming Standard Lithium a bit is now sitting at 27.4%. My ETFs are at 20.4%, and my dividends now make up over half the portfolio at 52.2%. I'm pretty happy with these weightings currently, but like I said, I kind of want my growth stocks to be around 25%, having 5% in each of my 5 stocks. And then my ETFs, I want that to be around 20 to 25 as well, as my ETFs are where I get exposure to the US markets through my NASDAQ 100 and S&P 500 ETFs. So definitely continuing to grow those positions and getting more exposure to the US markets. And then my dividend stocks are really just going to be the core for my passive income and being able to retire one day off of my investments. So that brings us to this week's watch list for the stocks that I'm going to be adding over the coming week. Again, like I mentioned, I want to add one more share of Canadian National Railway, CNR, as it has dropped since I've purchased. So I want to continue to dollar cost average into this. And I think in the short term, this stock might continue to see some volatility and sell off as they have overpaid probably for the Kansas City Southern deal, like I mentioned. So adding one more share of this next week under 130 is going to be my goal. And my second growth stock that I'm going to be adding is MCI One Health. This is my smallest growth stock position currently, DRDR. This is one that has continued to sell off. And this is one that I think is at a really good price to continue adding to. So I'm going to be adding 5 to 10 shares under $3. If I can get it around $2.50, I think that is awesome. I will be having a video on this stock soon, going over why I think this is a great telehealth and healthcare stock. And then on my watch list for dividend stocks are Manulife Financial, MFC. I want to add 2 more to continue to build up my financial sector weighting. This is also a stock that has that over 4% dividend yield. So starting to bring up my total percent yield of my portfolio by adding to some of those 4, 5, 6% dividend yielding stocks. And then I'm also going to be adding another share of TELUS, ticker symbol T. Added one below $26.50 is my ideal goal, as I want to get some more exposure to the telecom space and really just continue to grow my position in TELUS, as it offers around a 4.7% dividend yield at today's prices, which is awesome. And this is one that I think will continue to grow in share price as well, and it grows its dividend every single year. So this is just a no-brainer to continue to add to. So yeah, I'm going to be adding one more share at least of TELUS, and potentially also dabbling into AQN if it continues to stay around the current price of around $18.50. Like I said, AQN currently has a 4.5% dividend yield. So there you have it for my weekly watch list. I'm going to be focusing on adding one more share of Canadian National Railway, as they saw a big dip last Friday as the news came out that it looks like they will be winning the bid for Kansas City Southern, which I think will cause the stock to continue to dip a little bit in the short term, as it is most likely that they overpaid for Kansas City Southern. But in the big picture, this really helps expand their railway, and they now have railroads that go from Canada all the way down to Mexico, so really covering all of North America, which I really think is going to help them continue to grow over the next few years, and is definitely going to make this one that I want to continue to build up my position in. And for the rest of my stocks, I'm really focusing on my dividend stocks that have above a 4% dividend yield, that also are in some of the sectors that have smaller weightings in, and to add some more to my higher paying dividend stocks as the market becomes more volatile. At least I can guarantee that I'm going to be having that passive income from those stocks. So that's really my outlook for the week ahead and what I'm going to be targeting in my portfolio. Let me know down below what stocks you're going to be targeting next week for your portfolio and what you'll be adding to. Super curious to know. But again, I hope you guys enjoyed this video. If you did, smash that like button, subscribe to the channel. Lots more content coming your way. I'll see you in the next one.